Hello traders, welcome back to another episode of the Forex Pipeline. I am BFX, your humble host. Today we are going to be discussing about um, some Forex pairs, and we'll be doing a review on some trades we took last week and why we took those trades. So do well to watch the previous videos in case you miss any, so that you can know where we are currently in the market. So with me here I have GBP JPY. Last week I analyzed BPJPY and I called GBPJPY a sell from this level. And then I said if we break above this high right here, we'll be targeting this bar right here, and we can see that clearly the bar has been what tested, and I should be expecting sell to the downside. So obviously let's go to our higher time frame and see why we anticipated a buy to that place. So basically, market tapped into a very strong supply zone right here, support zone, and then gave us some rejection all the way to the upside. So right now, all we just needed to do was to take advantage of the buy that was happening on this pair. So from here, we have lower low, lower high, lower low, higher high. Sorry, this is higher low, higher high, higher low, higher high, higher low right here, and this is a what equal high. Now the reason why I call this sell was because of this equal high right here, and then I said the only time we'll call a sell all the way back down here is when we break below this guy right here, retest it, and then boom, all the way here. So but the opposite happened, rather the market broke above it. So this was a news. It was a news that took this market all the way from this range all the way to this bar right here. So for GBP JPY, I will be anticipating a reversal from this bar right here. I will be anticipating a reversal from this bar right here. I will be anticipating a reversal from this bar right here because it's a key level, as you can clearly see on the chart. So market has tapped into it several times, and I'm expecting something like this to happen all the way back down here. Now if you scale down to your lower time frame, you'll see that what has happened. The market has broken out of this place. The market has broken below it, we tested it, and this is a continuation pattern all the way down. So your first level target for this sale should be here. First level target should obviously be this low that created this push all the way to the upside. And if market takes out this low with a strong momentum, just like what happened here, I told you guys first, if this market breaks this high, this recent high right here, with a strong momentum, I will be calling for buy setups to the upside. So but the news took the market out of this range. If the market had broken out of this range without a news, I could have gladly jumped on the buy all the way here, but the news came and then pulled the market from this range all the way to this side. And don't forget, we are overall bullish on GBP JPY. If you check the last video, you'll find out that I spoke about the trend, and I spoke about how you can analyze the market from the higher time frame all the way to the lower time frame. And the main reason why I called this buy last week was as a result of this rejection candle right here. This is a doji candle, or will I say this is a hammer. This is a hammer. Yes, this is a hammer. Ideally I should be anticipating buys all the way to the upside, but for next week, because this week is gone, For next week, I'll be anticipating this market to move to this high right here. If we sustain above this bar now, please guys, there's something that is very important I want you guys to take note. Whenever you're taking your trades, please take note of some important levels and places where you have to take decisions from. Now, I will gladly tell you that if we sustain below this bar, we are bearish, and if we sustain above this bar, we are bullish. Now, what do I want to see to buy this market? Let me just give you a little tips on what I would like to see or what you should watch out for before you should buy this market. Now, firstly, you want to see something like this: a breakout, a pullback to this bar right here, and then a continuation to the upside. That is for a buy scenario. Then for a sell scenario, you want to see a clear push to this low right here, a pullback, and then a continuation down. These are the two scenarios you want to see. So your eye should be more on this bar right here. Your eye should be on this bar. Your eye should be on this bar, and that is why it is called a key level. Your eye should be on this bar. Thank you. Just as what happened here, as you can see clearly, the market broke above this level, came back to retest it before it pushed all the way to this place. So I see no reason why the same thing will not happen here, as you guys can clearly see. So that's that about GBP/JPY. Let me move on to another pair. I'll be discussing Euro GBP. Last week I actually missed this trade on Euro GBP. I actually missed this trade on Euro GBP. This was the reversal trade I took on Friday, but I had to close the trade for the weekend. So basically, now this, I had a bar right here last week, waiting for this market to pull back into it so that I will short the market. But for some sort of reasons, I've been busy and sorting out some one or two stuffs. I actually didn't take this trade right here. I was waiting for this market. This market was here. I was waiting for it to pull back all the way here. Then I will short this market all the way to this level right here, all the way to this red line right here. But I missed it, and I was actually hurt because I was patiently waiting for this setup to present itself. So basically, why did I anticipate this pullback and continuation for this sale? Now, if you agree with me, we have been creating lower highs and lower lows. This market has been on a downtrend. This is a high, second high, third high. Now, the only time I could have said we are bullish on this pair is if we had taken out this high right like this. Then I'll call this pair bullish to the upside. But the market had not taken this high. So long as we are inside of this range, and we are at this level, we are technically bearish. Why? Because this low is protecting the market from buying above it. Now, last 2 weeks closed with two indecision candles. Two indecision candles right here. Sorry for that. So last week closed with two indecision candles. Now, I am calling Euro GBP a short from next week. Euro GBP is going to sell all the way from this level. It's going to sell from this level all the way to this low right here. First level target is this low. That's what I'm calling Euro GBP. I'm calling Euro GBP a short from this level right here all the way here. Now we have 2 weeks of indecision. Now, the week before last, this market closed with a green inverted with a kind of like a shooting star pattern right here, and then it still closed at the same let me just take out all these drawings so that You guys can see what I am talking about. You guys can clearly see what I am talking about. So, as you can clearly see, these are two indecision candle at a trend line support, and the market has tapped into liquidity that is resting here. The market has tapped into the liquidity that is resting right here, and I am expecting a bearish continuation to this low. Now, next week I'm calling Indo GBP sell all the way here. How many pips sell? Let me calculate these pips right here. Okay, 140 pips. 140, let's say 140 pips approximately to the downside. So do well to take advantage of this trade. I'm just giving you guys a will I say is a review or a recap. So what or how can you take advantage of this trade? Let me just give you guys a little hack. Now, ideally, we have a what? A higher high right here. This is the high. This is the first point market started this move. We have a higher high right here. Now, if the market had not taken out this major low right here, I would have still called this market bullish. But this market has taken out this major low and has come back to what, to retest this level. Now, this is the higher high, the lower low. Instead of a higher low, we had a lower low, then a lower high, a lower low. What should we be anticipating? Characteristics of a trend, we should anticipate a lower high right here, and then a lower low right here. Just something like that continuously, continuously until we have a break of structure like this to the upside and sustaining above this low right here. Now, the only time you can call for a reversal is when you have a break of structure like this. This low, this major low was breaking out, and not only breaking. Now, what do we there are two type of break of structure. There's liquidity grab. I said it in my last video. There's liquidity grab and there's proper break of structure. And this is what I call proper break of structure. This is what I call a proper break of structure. As you can see, the market did not just tap into this low and then sell off. The market broke this low very well. Now, once you see a break of structure like this to the upside or to the downside, ideally you should expect a pullback. Now, once that pullback happens, you want to be taking your trades in the direction in which the market had broken structure. Now, if we had sustained below this high right here, if we had sustained, okay, just like this here, if we had sustained below this high right here, I see no reason why we should buy this market to the upside. But the market failed to sustain below this high. I took it out. Now, after taking it out, it pulled back to grab more liquidity, engineered it, and then it moved again to the upside. Now, that's just a simple basic on how you should understand liquidity grab. Now, let me just look for liquidity grab and then a liquidity run. Thank you. So this is what I call liquidity grab. Look at this. The market took out the low. Yes. Now ideally you could have this is our major low. Before this price action happens, this was our major low. This was our major high, sorry, major lower high, and then major lower low. Now, if the market had pulled back here, tapped into it like so, and then pull all the way down here, then we could have said, okay, this was just a liquidity grab that happened here. But what did the market do? The market tapped into it. After the market tapped into it, the market began to play around this level, play around this level, play around this level. Now, this is a pure case of manipulation right here. This is just a pure case of manipulation because now the market grab liquidity here, pull back all the way to this level, which sold all the way to this level. Now, ideally, you should be expecting this market to sell all the way here. Then, if it fails to break this level, then we will expect a buy to the upside. But the market just played around this level, even gave an M pattern right here, and then retested that, and did as if it was going to sell, but it failed to take out this low. Now, when the market failed to take out this low and started rejecting all the way and take out this high right here, these are just substructures. All these places here are just substructures. This is the major structure, right? This is the major structure, major high, major low, major high. I think this is the major low right here. I'm coming. Let me just look at this. No, that's not even the major low. This is the major low, and this is the major high, major low, major high, then break of structure right here. So I'm just using the single time frame to just to explain what liquidity grab and liquidity. So this is just liquidity grab, where a market will tap into a major low like so nicely, to tap into orders, those that are here and buying and selling will get stopped out. As you can see, the market sold all the way, sold a little, came out and stopped out. Traders that their stop loss are just above this high, then they sold again to this level, and then continue again. But ideally, liquidity grab will be an instance where the market will just tap into either a low or a high like this, and then continue. This is a liquidity grab, and then liquidity run is when a market takes out a low like this right here. As you can see, the market came, it grabbed the liquidity here, did as if it was going to pull, and then it run over it again. So that's liquidity grab and liquidity run. But if we are talking of a proper break of structure right here, we're talking of a proper break of structure. This is a proper break of structure right here. We had a high right here, we had a low, we had a high. Market took out this major low right here. As you can see, it took it out, it took out this low, pull all the way here, then pull back. After I pull back, took out this low, sustain below it. Now there is a difference between when market takes out a low and when market is manipulating a low or a high. The market has taken out this low right here. Now if a market takes out a low and begins to play around that level and refuse to move further, now there are high tendencies that the market is going to reverse. But if a market takes out a low and keeps moving and keeps moving and keeps moving with momentum, that means that is a valid break of structure. But if the market takes out a low and then begins to play around there and begins to form rejections just after taking out the low, and started giving rejections and rejections and rejections, something like this. Now, if you are a newbie trader and you just came here, for example, let me just this price action, let me just take them out. Now, as a newbie trader, you see something like this, you'll be like, whoa, this market has taken out this high already, so maybe this is the time to buy. And then you take your buy right here, place your stop loss just below this level right here, and then market will just come stop you out right here. So what you want to see is the market breaking this level properly, pulling back into this level like so, and then continuing all the way up. And this is where you want to be executing your buys from. After you have seen a proper break like this, and then a pullback, then a continuation. That is when you want to be taking your trades. I hope this is clear. So let me go back to what I was saying. I just wanted to make it very clear to you guys. So this is a proper break for me. This is a pure, nice, proper break of structure right here. Market has broken structure, right? And has pulled. And it's already forming a W right here. I'm expecting this market to pull back all the way into this level before it sells off. Now you can just use any means. Now for me, I was actually trading these reversals to the upside. I created the trend line from this low. This is the last low. This is the last low the market created. As you can see, the market is respecting that last low on the trend line. So I was when the market tapped into this trend line right here, I was already anticipating a buy, so I just executed my buy trades from here, and I'm expecting the market to pull all the way to the upside. So that about Euro GBP. This is what we should be anticipating on Euro GBP: pull back and then a sell off like so to this level. But if so, you just have to always think of the positive and negative side. If this guy right here, if the market takes out this guy, then our sell is invalid. If the market takes out this guy, our sell is invalid. But if we come into this level and started to do something like this, something like this, something like this, something like this, then we want to look for sell executions. Yes, want to look for sell execution. That's what you want to see. So Euro GBP next week, I'm calling it a sell onto this last low it created right here. I'm calling it a sell to this low right here, which is 0.83 83834. That's what about Euro GBP. And then let me talk about gold also. Oh yeah, let me go to gold. Let me go to gold. So for gold gold has created a new higher high currently. So I was expecting the market to fake out, to enter, to take into the take out this 25,000 level, because that is a Fibonacci extension level actually, and the market is breaking it aggressively. Now last week I was anticipating the market to pull back into this level right here and then continue, but the market did otherwise. The market didn't pull back into this level before it continued its movement. So I had no reason to enter this trade last week. Just watch the markets moved. So basically, guys, gold has created a new all-time high right now. The market is in the current all-time high, which is above 25,000. 2,500, sorry 2,500. So it is practically bullish. Gold is practically bullish. Gold is practically bullish, but nevertheless I'm still expecting a sell all the way to this low right here. I'm still expecting a sell all the way to that low right here. So but even if anything like any sort of reversal should happen, I should expect it I should expect those reversals to happen below the 25,000 before I can even call the sell. Yes, in the sense I should expect those reversals to happen below 25k before we can even take those sell trades. But if we are above 25k, well, we have no choice than to be buying the market. So gold is actually bullish. It has broken out of this range and it has created a new all-time high. It has ranged here for over 2 months. Yes, it has ranged in this level for over 2 months. The whole of April, May, June, July. Wait, I'm coming. I think it's even more than 2 months. It's April, May, June, July. I mean August. Wow, 3 months of range. It's crazy. Market has been ranging for almost 3 months. And let me see something. All right. So, guys, it is nice having you in this segment of the Forex pipeline. And in case you have any question, don't hesitate to drop it in the comment section. Whatever you don't understand and you want me to explain more in the next Forex pipeline, I will gladly do that. So do well to like, subscribe, and share it to your friends so that they wouldn't miss out on exciting and educative content like this. So for CAD JPY right here, you can clearly see that bullish momentum is back into the market because this is a what? This is an inverted hammer, a rejection candle signifying strength of the buyers. I'm expecting this market to buy all the way. In fact, the next level target should be 120. Next level target should be 120 right here. 120. Next support level. As you can see, 120 is the next level target for CAD JPY. And then for GBP USD, correct. I said I was going to talk about GBP USD. It's almost skipped my memory. Yes. So, guys, last week we spoke about GBP USD, and as you can see nicely, GBP USD has pushed to the upside with a whole lot of bullish momentum. Even if unfortunately I was unable to take this trade because I have not seen what I really want to see to enter a trade. The price action right here is not aligning up with my pattern of trading actually, because it's not giving me the kind of pattern I really like to see. It's just really moving and moving and moving. But if you had taken this trade, I called out here last week. I told you guys that GBP USD will be moving all the way to 1.30045, and we are almost there. So, guys, this is just there's no rocket science right here. I'm just explaining the new what I'm explaining a very easy and simple, straightforward strategy to you guys. It's not rocket science, it's not anything new or something. There's not too much English right here. Now, I was expecting this market to actually take out this level right here. After taking out this level, to pull back into this level right here and then give me some sort of confirmation, but the market did otherwise. Now, even if I would jump on this market for next week, guys, you can still jump on this market. Even if I jump on this market, I want to see something like this, pull back into this level, and then continuation to this high right here, of which I'll certainly take this trade next week. If this should happen, I see no reason why I shouldn't take this trade next week. So basically, this will be the low. This will be my swing low right here. Now, guys, the reason why I actually did not take this trade was because, as you can see, this market just pulled all the way to this level. That's what was just creating minor structures. I really did not see any major structure, any major pullback right here. It has just been creating little moves, and then it just spike, create little moves and then spike. So, but I am safe to say this is my swing low right here. And then anywhere the market begins to reverse from here is my swing high. If the market does not reverse, then this trade is gone for me. But if the market actually pulls back to give me a decent entry, then I see no reason why I shouldn't buy GBP USD all the way to this level, right? Over 170 pip movement to the upside. Now, I want to see the market pull back to this level right here. If we pull back something like this and we continue, the market is going to give us that which we are looking for. So, guys, I called this trade last week. If you are fortunate enough to have watched this video and taken this trade, you actually be in crazy profit. Just Forex Pipeline episode 3. Yes, episode 3. I called this trade in episode 3. So do well to watch it and see the reason why I call this trade bullish from um the market was here. Yes, the market was here at the moment. The market was here. And I called it bullish all the way to this level right here. And the market is already pushing without apology to that level. So, guys, This is all I have to say about GBP USD. It is just completing a trade I called out last week. So if the market eventually gets to this level, now if we break this level, ideally, I personally would really like to take my profits. My overall TP target will be here. Let me just show you. My overall TP target would be on this purple line I just adjusted right now. Now, my overall TP, this is what I'm anticipating. This is what I'm anticipating on JPUSD. I'm anticipating a push all the way to this high right here, and then a sell like this. This is what I'm anticipating on GPUSD. This is what I'm anticipating on GPUSD. A push to take out this high right here, and then a sell. If this sell should take out any of these major lows right here, any of these two lows, if this sell should take out any of these two lows, and sustains below them, now let me just give you guys, if this sell should do something like this, so you guys have to learn to plan your trade. Learn to say, okay, if this happen, I will take this action. If this happen, I will take this action. And that's how you know what you're doing in the market. If you don't plan your trades, you just trade haphazardly and anyhow, which is very, very deadly to a trader. Now, I'm expecting this market to pull all the way, take out this high and sell. Now, if we are not able to sustain in this zone right here, and we take out this low and do something like this, I'll in turn be looking for a sell position to the downside. I'll be looking for a sell trade to this place right here. Is what I'll be looking for. Now, don't forget that this is our daily swing low, daily swing high. Market is already approaching our daily swing high. If we take out this high, we'll be attacking this level right here. If we take out this high with strong momentum, we'll be attacking this level. Now, this is how we should still take advantage of it. If we take out this high right here, we pull back into this level, execute, and then if this high is still taken out like this, because the market does not just move in a straight line, it has to just keep giving you high highs and higher lows, lower highs and lower lows. So for bullish moves to give you higher highs and higher lows, for bearish moves to give you lower highs and lower lows. So just want to see something like this, just continuation. It keep Market will just keep breaking structure until it gets to the top. So guys, that's all about GPUSD in a nutshell. And then let's talk about USD Canadian dollar. So it's actually been now guys, um what I spoke about on what I spoke about on GPUSD is what's happening on Canadian dollar, USD card. So guys, I told you that I was anticipating the market to take out that and the high on GBP which is this something like this, and then I'm expecting a pullback. Now, two things are involved. If this market, if this market should sustain, if this market should sustain above this level right here, if we sustain above this level, I will keep calling USD card bullish above. If we sustain above this 1.359, just say 1.36. If we sustain above 1.36, which is in this range right here, I'll keep calling USD card bullish all the way to 1.4. But if we take out this low right here and sustain below it and do something like this, and I'll call USD card short all the way to this low, to this swing low right here. This is the most current swing low we have in the market. This This is the most current swing low we have in the market. So I'll now be looking for what? For sell signals all the way to this low. Now you guys should know that the market move from zone to zone, and that is just basically what I'm doing right here, taking advantage of price actions and holding them until they get to the zone I want to get to. For me, I'm a day trader, I'm not a swing trader. So if I take profit at most recent key level, I still wait for another entry and then take another trade again. So guys, this about USD Canadian dollar. The market now, the reason for this sale that is happening right here is because the market has just taken out a high that is very strong and prominent. The market just broke the high, broke it. This is just tapped into it and it's selling already. Now if it can gather liquidity from this level right here, from these minor structures or from these internal structures, if you can gather liquidity from the internal structure, liquidity enough, it will still push the market all the way to this level. It will still push the market all the way to 1.4, because on this pair overall on this pair, this is the overall this is the overall range. This is the low and this is the high, and this market is in a journey to this high right here, to this high right here, or to just 1.4, 1.45. The market is joining all it's moving to 1.45. So it has just gotten a state of resistance around this level and is actually struggling. Now, the only time we can call this market short is when this low right here is taken out. And if this low is taken out, then we can now say, okay, the market tried but failed. And that's when we'll start taking sell trades and sell. We'll start looking for only sell trades all the way back to this low. But this low has not been taken out, which means this bullish move is still valid. So our targets, our overall target is here, and that is why you should learn to use the higher time frame in your advantage, because the higher time frame tells you where the market is actually headed. As you can just see clearly on this chart right here, the market is headed to this high right here. Yes, the market is heading to this high right here. So what do you want to do? You just want to always wait for most of the buy opportunities that are going to present themselves inside this level, then you execute them. Because once you're trading with the trend, most of the times the market just moves nicely to your direction. Now if the market should take out this low, this is what I'm anticipating from this market right here. I'm anticipating it. This market just take out this low like this and then continue this bullish movement all the way up. This is what I'm anticipating on this pair, on USD Canadian dollar. Yes. So I'm anticipating the market to take out, that low, pull back into this level, and just pull back into this level. Either of these two happens. Either the market just fix out this low and then continue, or it sells all the way to this level and then continue its bullish movement to the upside. So guys, I've just given you guys some little important tips that are going to really help you in your trading journey. So guys, I think this should be done for this week's Forex pipeline. Do well to like, subscribe, and share. If you like what I do, if you like how I explain the market to you, do well to share to your friends, to your family members that have interest in trading the financial market. This strategy is just very simple and straightforward. You don't need any indicator on your charts. All you just need to do is to work with your price action. Now I'm seeing a bullish move on this pair right here, and let me just explain it to you guys briefly. So GBP NZD, let me just clear everything. So look at this market now. From here you can tell that this market is very much bullish. Major low, weekly high, low, As you can see, market just took out this high, but I was still expecting it to pull all the way here. At least it should pull all the way here before when they should now expect a reversal. So, but you don't tell the market what to do, please. Don't get me wrong. You don't tell the market what to do. You react to what the market is doing. Now, basically, from what we are seeing right here, this is the most recent uptrend of this market. Let me draw my trend line nicely for you guys. This is my most recent uptrend of this market right here. Can you see? This is the most recent uptrend of this market. Now, these are what swing low, swing high, new swing low. These are new. This a new swing high, but it is not that clear. Was a new swing high. Now, this market has actually come here to give something like a low, but this is not a low. This is a minor structure for me, and this is not even what I'm expecting. This is not the kind of break I'm expecting. I'm still expecting this market to push. I'm still expecting this market to push. Swing high, swing low. I'm still expecting this market to push at least like this. Yes, to take out this high right here. Once it takes out that high, then we'll now pull back. We should expect a pullback like this, then a continuation. So guys, this is what I'm expecting on GBP Forex. So the market has even taken out this high already, and which was why it was selling off. But still, I'm still expecting it to still break that level. So as you can see, last week it closed with a bullish candle right here. This small bullish candle. Next week I'll be expecting the market to buy back to this level. Now, if it buys back to this level and experience resistance here and begins to give sell signal, we'll short. But I will not advise anybody to short this market because this market is actually on a bullish move. Is moving very, like, the bullish move is very strong. Let's scale down to our daily time frame. As you can see, it's kind of form a W pattern right here, and form a W pattern right here. Normally I would like to wait for the market to tap into the neckline of this W on the daily pattern, on the daily time frame like this nicely. I really like the market to, I really like the market to tap into this level like so. Then I'll execute for buys. Now I will not just set my buy limit orders right here. No, I'll wait for market to pull into that level and give me some sort of confirmation, sort of candlestick reversals and reactions before I can even make any trading decision. I won't just say okay because this is a W pattern, then I'll just buy the market. No, as you can see, before this reversal happened, it gave a bearish engulfing candlestick, pull back a little bit, and then continue to sell. Now, this is what you. These are just some of the things, criteria you should also be waiting for. If the market comes here, it's either it gives you a shooting star, W pattern, anything, but so long as it is kind of like a rejection from this level. Now, it is trying to tell you that this level is actually valid and is going to most likely hold. So, if you're taking your buy trades from this level, you should be targeting. Should be. Let me just see how many peak move that's gonna give. That's gonna give us about 487 pips. So it's crazy. It's actually crazy. So if this level should hold, if this level should hold right here, we'll be expecting buys to the upside. But if this level does not hold this market, if that level does not hold this market, if that level does not hold this market, then we should be expecting some further push to the downside. Yes, this level does not hold this market, we should be expecting some further push to the downside. Some further push into this trend line. And if this trend line is taken out, we'll be expecting this low. This low should be the next level target for us. Nicely like this. So expect the market to tap into this low and then pull all the way back up. So guys, that's that about GBP NZD. Please guys, have a nice day. This video is actually long, but it is worth it. I've dropped in knowledge and knowledge and knowledge into this video, guys. So do well to share, like I said before. Peace out to everybody, guys.